And we'll just say hello. The strategy that we're running is actually running on our main screen. This is a shadow of it, and as you can see, it should have hit a profit target down the bottom, but we had a little synchronization issue, and so we're watching it closely and see if we get this first trade in the boat, and then the machine will have complete control. I'm not sure why we lost synchronization on it, but we did, and we're aware of it. So, it's one thing to lose synchronization of a strategy on your screen and know about it versus not know about it. So if a strategy gets out of sync and you're asleep, that's not a good thing. That wouldn't be good because, any number of things could go awry. But we got eyes on it. We should be okay. And then make sure the strategy is firing in sync. It's not a real fast strategy. And so it's not going to be trading its little butt off here. I don't expect that. Hope you had a wonderful Christmas and Hanukkah, and you had a great weekend. And we're looking forward to, once again, it's probably going to be I think, a relatively quiet week. Relatively quiet. Um, I think we have to be on guard this time of the year. Um, so, keep our fingers crossed that the new year comes in and everyone's, safe and sound around the world. But, there's some dangerous things going on and happening. And I'm not wishing on anything. I'm not. But I wouldn't expect I would expect the markets to be relatively flat to maybe up for the week. But then again, um, you never really know, right? But we would be expecting relatively light volume. I think the volatility in the markets as soon as we get past New Year's and into January is going to come rushing in and rushing back to the market. If you have any questions, let us know. We're just getting our work done, getting squared away, and getting some hard drives and everything backed up. We wish everyone the best. This is trade number one. So we have mentioned the machine. You can see the machine went in here, and for some reason, we still don't know why, the order did not get filled. So we're trying to back check that. So we put the order in, and then we put it on what we call assume real world position to get the machine to manage it. Now, the machine, had it got its fill, we may have gotten a little different entry, and so it didn't get the profit target. We think that's why it didn't. It's still in the trade. It should have taken it, and it's unfortunate because that would have been about a $600 winner. Um, and now it has countered. So we are still watching it. When you are strategy trading, you do need to be mindful of what the strategy is doing and that it is in sync with what it's supposed to be doing, right? So I'm not sure just what it is. So we're gonna let it play itself out. We're keeping a close eye on it, and and then we'll be watching that next trade whenever that is, and make sure that she's in sync and we're off and running. So that's why you see a profit target, and yet there's still a trade up there. So no biggie, but still not really sure why it missed it. Kind of a little bit weird. Should have. Hope there's no other issue. Now, I gotta say, I've never seen so many postings. I don't know about you, a lot of postings about bad things to happen next year. Um, a lot. I mean, it just seems like that's the dominant view. And I usually think that I wish that they weren't so bearish, right? I wish they weren't because a lot of times, it doesn't happen. It goes the other way. But technically speaking, we have some things going on here. We have yields rising. They're rising. And they're no longer inverted, right? So the yields on the far end of the curve are going up, and the short-term yields are not going down. That's for sure. And there's a healthy spread between them. That's actually good for banks. That's actually good because they make money. And now the question is, and that will strengthen the dollar. The dollar will stay strong. If the dollar stays strong, um, that could put pressure, on some commodities. Um, it's just gonna be interesting how this plays out. Um, and maybe the economy can kind of muddle through this. But I think ultimately, if the rates continue to push up, it's going to hurt the American housing. And the first sign of trouble in the market, um, if those rates do rise, I mean, I think will come, the sell-off will come in stocks, and then what will the Fed do? The Fed will cut, but they'll be late. And then what happens? The yield curve will abruptly invert, and then that's when we could, sharply slide into a recession. But I'm not so sure that it's going to happen right at the first of the year. We got some crazy things going on still here politically. Um, the Speaker of the House has to be voted in. He's got a narrow margin. He may not. And I think he has to validate the election results. What if we don't have a speaker that can validate the election results? What happens then? I don't know. Um, so there's a lot of uncertainty. I would be inclined. I think the volatility will return with a vengeance. The volatility but I don't think that the correction, if we're going to have a correction in a recession, I'm inclined to think that it may not start in earnest until March. March 5th. Somebody asked, why March, Don? Why March? Well, beware the Ides of March. That's when Julius Caesar took one in the back from Brutus. The dot-com started, that crash started on March 5th. The '08 crash of all crashes, supposedly, I didn't think it was that bad. That ended on March 5th. So there seems to be something around March 5th. So you might just jot it down in your little day timer. Okay, so and you see that little short there. I want to make sure we didn't double up. We didn't. Hmm. Okay, so it knows, my strategy knows it's still in a position. So it's doing what it's supposed to do, and I'm not doubling up. This strategy here was a copy of it. It thinks it's out, and therefore it would have gone back in. But I have the original strategy, and so where I put it on assume real world position, it didn't double up, which is what I would have wanted it to do. I think if we run back down, it should trigger a profit target, and we should make, 650, $700 and um and wait for the next one. If you have any questions about who we are, what we're about, don't hesitate. And other things that I think are interesting, if you're looking for some counter trades, I would be a buyer of the Japanese yen. I think I'd be a buyer of yen. I think I'd be a buyer of the Aussie dollar in the way of currencies. I don't think I'd be a buyer of the euro yet. I don't think so. I'm not sure that I'd be a buyer of the Canadian dollar quite yet, the loonie. I think it could go lower. Maybe we get down to 65 cents or something like that. Maybe. Great time to go visit Canada. Um, it's quite low. Not good for it to be Canadian on that, but great to be, if you're in the States and you want to go visit Canada on the cheap. I'm not I'm not bullish crypto. I'm really not. Um, I really I don't like it technically here, and I think the risk is very, very high. And if the dollar continues to strengthen, I think crypto could go with everything else. So we'll see. As you know, when we're trading intraday, intra-evening, all that stuff is interesting, but not what we trade, right? It has nothing to do with this trade right here, and I could care less. Um, if you're having to put on some position trades, that some of that might come into play a little bit, but we'll back up and take larger time segments and use larger bricks and so forth to affect larger trades. And then it's from an investment standpoint. From an investment standpoint, I think if you're committing new money to the S&P or to the stock markets, particularly here in the States, I think you need a saliva test. I think you're crazy. I think you're just nuts. The risk is just way, way too high. So, and I think you'll have better opportunity to get involved, and you just have to be patient and disciplined and wait. And then when that opportunity presents itself, then you got to be prepared to act. So, but we'll see. We'll see how it plays out this year. We wish everyone the best and a safe, happy new year. Any questions, let us know. We'll be nearby getting some work done. I will just say this for the folks that are coming by. We've been doing this a long time. I'm not a broker, not a financial advisor. Um, Susan and I have been fortunate in life. My background is from the medical area. I taught surgeons how to do surgery, so go figure. Surgeons, by the way, are probably more interested in the markets. But they're very interested in surgery. They're not so interested maybe in seeing visiting patients. They love to do surgery and they also love the markets. Um, Susan worked for IBM and Lotus Software back in the day. And in the early 2000s, when the internet really started to come available, I said to Susan that it was time. And she, what do you mean, Don? I said, it's time, Susie. I said that, this whole notion, candles and so forth, and we had done fine investing in the IBD and all that stuff, but it was bullshit. It was just bullshit. They're like, what do you mean, Don? It's bullshit. What? What do we do? I said, Susie, we're going to trade. We're going to trade using systems. We're going to track the money flow. Because when it's all said and done, um, having worked for companies, and I'm not going to trash any companies, but if you've worked for companies or you work for anyone, um, when money's involved and market performance and all of that, um, they lie. They lie. Isn't that shocking? I know that's probably shocking to you. They actually lie and they will fudge numbers and they always beat by so many pennies and everything. And, because they get these things called stock options, right? Which we got our share of stock options. And, but people in the C-suite. So if they lie, then how can you trust anything in what they're doing? And if the companies lie, then a lot of times the people around the companies lie. The markets can lie. The financial media, I mean, God, the original, I mean, we were calling it faux, 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 fake media, long before Trump. I mean, this is in the early 2000s. I'm like, this is a bunch of nonsense this was, right? It was just nonsense. And so I hope you're not listening to any of that. If you listen to it and you just, find it interesting, I do that a little, but I hope you're just not listening or factoring any of that into your financial decisions. It's a waste of time. It just is. It's nonsense. It sells soap and it keeps people like Joe Kernan, employed for longer than he should be, and Becky not too quick, and they're underworked and overpaid, and you won't learn anything from them. I mean, they don't know anything about the markets, really. They don't. They don't know anything about trading, and yet they're on day in and day out. But the limousines pick them up in the morning, and people get up in the morning and have breakfast and shave, and you know, I listen to that crap on their way to work. It's nonsense. And at this time of the year too, they'll bring every Tom, Dick, and Harry in to give their prognostication of where the market's going to be at the end of next year. And of course, if when you listen to those people, no, you listen, you tell me there'll be, Tom Lee, they get the big, and notice who those people, they change employment. They they go from one bank to another to another to another. They're constantly changing employment, and which should tell you something. And then they'll always end with, Tom Lee is famous for this, but he's not alone. They all do. I'm sure he's a nice enough guy. And they'll say something like, he'll be talking to Joe Bag of Donuts and he'll say, well, Joe, I think the market's gonna go end the year, as I said, at 6,200. And then I think like next year, we might have a little pullback, but Joe, I think we're gonna be going to like 8,500 to like 8,700. And he just picks a number out of his ass. Let's face it, he have no clue. Nobody has a clue. Right. They just, there's a built-in bias for it to go up, but that's what they'll say. Yeah, and that's, and it's just ludicrous. It's just ludicrous. Um, if everything is right with the world and everything is right with the economy and money is still flowing, then money will flow into whatever. I don't care if it's crypto. I don't care if it's gold. I don't care. And if money is flowing into something, then yeah, you go with it. You go with it. And if money is flowing out of something, get out of it. Get out of it. But don't be left holding the bag. And trust me, Michael Saylor, who's, the big, buzz on Bitcoin, he has people that are hedging that with futures contracts. If he owns those Bitcoins, those are hedged. He doesn't tell you to hedge. He don't tell anybody that they could care less. They don't care. Which the whole thing on the Bitcoin too, by the way, I don't know if you've noticed, but when Bitcoin first was coming out, it was an alternative currency, right? It was going to, replace the dollar. It was going to be an alternative currency. It was going to be able to get away from government and get away from all that. It was freedom. It was this, it was that. They don't talk about that anymore. No, no, no. Now it's a store of value. And you ever notice that little sleight of hand? It's now a store of value. And BlackRock of all things. Yeah, now BlackRock. Now the Bitcoin is what BlackRock's coming in. I mean, I get it. If you're early into something, early into a Ponzi, I guess you want other people to buy it so you can turn around, see it get run up, and then you dump it. It's the old pump and dump. It goes on and on and on. Um, the people who get hurt are the people who come in late, who believe in the tooth fairy and believe in the Matt McConaughey's, view of Wall Street. Remember when he said, the parade comes to town? It's all pixie dust. It is pixie dust. It is. So we don't get caught up with it. We just, when the parade is coming and the money is flowing, we go with it, and if it flows the other way, we'll go the other way. And we'll just take our portion and we'll get on out of town. Thank you very much, Mr. Market. That's about it. Um, We manage our risk by not over leveraging. We manage our risk by not having too much exposure. Time in the market is an exposure. We manage our risk when we decide to go, when we take on a bigger bite. Um, we will reduce our leverage by using options, and we'll go out a few weeks, maybe a few months, and we'll define our risk using options. Defining risk, always defining risk, right? The first thing you want to define for yourself is, if this trade is wrong, how much am I going to lose? If you're only putting on trades or investments and you are only, concerned, oh, it's going to go to the moon. Bitcoin is going to go to $2 million a coin. You know what, folks? It might, I don't know. It might, but it might not. Right? It might not. And I don't want to be the bearer of bad news, but I'm a realist, right? Um, and that's why we set out in the early 2000s. So this isn't something we've been doing for just 6 months or 6 years and just showed up on, Twitter. We've been doing this for years, and we're very well thought out, made a lot of mistakes. We had a lot of success earlier. We were involved in the markets before, we had furniture completed. Truly, we're been doing this a while. Can remember Susie saying, Donnie, we're opening an IRA account. What is an IRA account? Donnie, we only have a bedroom set and a dinette. All right, what else do we need? But we do need an IRA. Why do we need an IRA account, Don? Because Susan, we're going to have a fantastic life, a great life, and we are going to be independent, doll. We're going to go where we want to go, when we want to go, do what we want to do, within reason. We may not have one of those big boats off of Monte Carlo. We've been to Monte Carlo, by the way. Been to Monte Carlo, but we may not have one of those big yachts. That's okay. And but we started doing this in the early 2000s. Why? Because the technology was there. The commissions had come down, the technology was there. Um, and Stock Market Caddy didn't come out of the ground until 2011, 2012. Why? I was bored, quite frankly. That's really the only reason. We're just bored. It's when you're trading like this, I listen to books, I listen to music. We have a treadmill, try to stay healthy, get some beautiful dogs. I take them for walks. And I just do a lot of reading. It's pretty quiet. I can't have the TV in the office. I can't listen to any of that shit. But I will, watch some things, some serious things, with Susan, but very, very sparingly. I don't watch Hannity or MSNBC or any of that crap. I mean, my God, what a waste of time. I'm sorry if that's your thing. I mean, enjoy, I guess. Um, I love what I do here. I love trading in the markets. I really look forward to doing it. It's funny, when you're working for other people, and there was a time when I was working for other people, and I had a difficulty getting up, right? I used to like to sleep in, on Saturday mornings, and and for a surgery person, I had to get up early, 4:30, 5 o'clock in the morning sometimes. So for much of my career, I was like, oh man, if I could just sleep in. Um, Now, we enjoy the holidays, don't get me wrong, but it seems like it's such like an intrusion. It's like I want to trade, I want to be around the markets. And sleep for me, I get plenty of sleep. I'm here all the time, it seems, but it seems like it's such a waste of time. Like I'm very conscious now of time, and I don't like to waste it. And sleep seems like a waste of time to me. And I want to do what we want to do. It's a blast. It is a blast. There's so much. Um, this whole idea of programming and stuff that came to me late in life too, by the way. So you're never too young, you're never too old. I didn't. I had a little bit of programming exposure, but I didn't do it as a business. I didn't do it as a career. I didn't get schooled in it. I learned, took some courses and learned. And Susan had a lot more. Susan's very good at math, but and I love it. Absolutely love it. We have so much, right? I had to get, with excitement, I had to get n new hard drives delivered. They're chock full of stuff. It's great. Love it. Love it. So really looking forward to next year. It's going to be a blast. And but we're here to, it's your opportunity to ask questions. You want me to punch in a particular stock on a particular interval, I can do that. You're looking at Swing Machine up here. This is the NASDAQ futures contract. This happens to be a Renko chart. One of the biggest mistakes that folks who trade price bars and Renko and they size the bricks incorrectly. We have a tool that tells us what size the bricks need to be based on where the market is, what the market is doing. Um, but all of this writing here is being done by the computer. The computer tells us what the brick value is. This is the trend caddy, and it's telling us that we might favor the short side. I didn't type that in. The computer typed that in. Distribution is underway. That's in the eyes. Tells us if we have any divergence. On the chart itself, you can see what we call the C points. The red ones are the C point downs. The green ones are the C point up. These little markers behind here are what we call the ball markers. And then you can actually see an actual strategy. So what is different? What is the difference between an indicator and a strategy? An indicator is something on the chart indicating whatever. A strategy is is a strategy whereby the machine is prepared to put trades in and out based on a set of criteria and can literally put the trades in and out. Now, of course, and they may go in and out. They can only go in, on a certain set of rules, but they can come out on half a dozen different rules, different ones. And you can intervene if you want, right? And you can trade right along it or suspend the trading or we can do something called optimize. And some people who have been around this a little bit think, well, that's you can curve fit. Well, Yes and no. If you got to learn and know how to optimize. If you over optimize and that's all you're trying to do, you're optimizing for the sake of optimizing, trying to get some exceptional curve fit. Um, then yeah, you might be curve fitting. But maybe you just want to optimize, like, and you're trying to decide when should I start my trading? Should I start it at 4 in the morning? Should I start at 5 in the morning? Should I start at 8? Should I end at noon? Should I end at 1? Should I end at 3? So we can optimize the hours. Should I trade 3 times a day, 5 times a day? We can optimize the number of trades. I didn't even know we could do this. Now, here we've been doing this for years, right? Years. I just never thought to do it. I didn't think it would be that necessarily that important, but we have a member who has been with us for years. His name is David. He's in Germany. And he said to me, Don, um, on Swing Machine, he said, I think I'm seeing a better performance on certain days than other days. Can you build in an option to give me the capacity to specify that the strategy exercise trades on a certain day of the week? So I'm like, I don't know. I don't know. I think we can, but I'll find out. Right. And so this is also something we will do for our annual members. I don't have a deadline. As I told him, I said, David, it may take me a little bit longer, but because we're pretty busy, but I'll look into it. And so what we did was we made Sunday nights 0. We made Monday 1, Tuesdays 2, Wednesday 3, Thursday, right, 0, 1 through 5 through Friday. And then we built that in as an input. And now he can put in like 2 or 3 to represent a particular day. But more valuable than that, he can optimize. Now we didn't go through a whole lot. Honestly, I haven't had a chance at time, but I just optimized and I asked the computer, all right, it's a particular strategy, swing machine strategy, and tell me, between 1 and 5, what day would be the best day? And it was kind of interesting, the result. Now, is it? I don't know, and he will be, and of course, David's German, and he's a very, very, very precise, very, very sophisticated trader, and but he will drill down on that for sure for himself. So that's the sort of thing. But so, I described that, that's what you're up against. And now we're not competing. I don't have to beat David. You don't have to beat David. You don't have to beat me. You don't have to beat Susan. You don't have to beat anybody. You just need to come in and be able to extract the money flow. But if you're just coming in and sitting your fanny down from day to day, and you just like, I don't know, I'm going in the office, going to get in front of the machines, and all right, they're open. All right, hey, oh, that chart that candle looks kind of interesting. I gotta, this, that, and the other thing on the candles, and I think I'm gonna buy some of that. Oh, and the money runs up. Oh, I'm gonna take it off. Okay, I just traded. Folks, I don't know. I don't know what to tell you. I think that's gonna run its course. It's gonna run its course. You know. Um, I equate it to a lot of other things, and just like golf, you may watch golf on TV, you may watch a video on golf, and it may look really, really easy, to hit that golf ball, 180 yards with a 5 iron. How hard can that be? Well, um, have you tried it? You know, um, there's a skill set. It's a skill set. So trading is a skill set. And if you're following somebody, just to follow them and they, I think the market's overbought right now. And you go into your IRA account and you just like get short the market because somebody online told you that it was overbought. I think that's insane. I really do think that'd be nuts, right? Um, we try to bend over backwards. Our members, whoops, we have just two levels of membership. We have a base membership, a monthly membership. They get to see the Um, the algos at night, we all see the same thing at the same time. We have a members website, and those algos are explained to them how they're put together, what they're showing, what they're doing. And then from there, people can begin to get an idea who we are, what we're about, and then hopefully they can begin to put those opportunities into whatever it is they're doing. And maybe hopefully it helps them. We hope it does, and they can begin to, pick and choose what trades they might want to be putting on. These would be trades we would consider swing trades. When you're putting them on for, a few days to maybe a few weeks. As a swing trader, we don't think that you should be paying attention to the intraday traffic. So if you define yourself as a swing trader and then you're watching the tick by tick action, um, I don't think you're helping yourself with those trades. I don't. If you enjoy watching the tape and the intraday action, then you want to trade intraday. Great. I mean, we do. We love it, right? Absolutely love it. And and that's where we can help you do that. That level of membership for us is what we call an annual membership. But you can't become an annual member until you go through something called the Q School. What's the Q School? The Q School is it's not a job application, but it's a what we call a qualifying trading school. And it's for 3+ weeks. And you're going to get the opportunity to work with many of the programs, especially if you have TradeStation. You'll get a live Zoom feed. I'd like to spend 1 to 2 hours with you every day, no more than that because we need you trading, but in a live environment over a few weeks. We want to be able to show you much of what we have and how you might go, and we're going to get to know each other well. I'm going to get to know your trading personality. You're going to get to know mine, but we're going to be in a better position to try to help you work through some things to get you headed in the right direction. I don't know what the outcome will be, um, but the vast majority of everybody that goes through the Q schools, and this is why we continue to do it, is they do become usually, but not always, um, an annual member. If a person goes from the Q school and says, geez, Don, I really, really enjoyed that and I did really well, I want to become an annual member, we're going to give you back 30% of what you spent on the Q school. And we're going to give you that toward the annual membership. Then the annual membership, what do you get? You get everything. You get everything that you worked with, and then you get then some. You get everything that's on a desktop. You get the swing machine. You get all of these tools. There's dozens and dozens of them. Those close to 70 of them. And and you still get a live Zoom feed. And if we have annual members out there, we might, and say, hey Don, I want to know, exactly what you're running there. I want to know what the profit target is. I want to know what the exit is. I'm going to tell them. It's not going to impact me negatively at all. We're not in competition with each other. These markets are very, very deep. And by the way, to move the S&P futures contract at tick, I think it takes like about 100 contracts to move it at tick. So, I'm not trading 100 contracts. And we don't have enough members that, that there's, 100, contracts necessarily going in. At least I don't think so. I don't think so. But there's too deep. There's too many opportunities. I remember, back, decades ago thinking, oh, why would somebody, you know, make available something that if it's working for them, and the reason that question even for myself was born from I didn't know what I didn't know. I didn't understand how deep the markets are, and they're very, very deep, very liquid. So it's not hurtful at all. Um, but in any case, um, but if you got any questions you want us to patch in, and I don't, we say this all the time. And if a person decides after they finish the Q school, I'm not ready, and that's fine. Person can always come back. That we think they'll have a better education, a better understanding. for sure. And but I can't make any claims, right? So we don't say that, if you're going to trade the C point, this is how much money you're going to make. This is what your performance is going to be, and this is what your annual return is going to be. If you're looking for that, then, you want to go to a mutual fund. You want to go to a money manager and you just want to give them a bunch of money and, and grade them from year to year on that. Um, that's not what this is, right? We're not set up for that. These individual strategies are not set up for that. If you're out there in internet land or on YouTube land and you're going from video to video to video and you're looking, now I want you to think about this. If you're looking for something that doesn't exist, you're going to do a lot of looking and you're probably going to be disappointed. I'm not talking about just trading. I'm talking about anything in life, right? You're looking for something that doesn't exist. We can think about a lot of different things that don't exist. And if you go out there and you keep looking for it, you're going to be disappointed in life. So if you're out there in the trading world and you're looking for that one, I see these, you see them too. This is the super, super duper indicator. And if you buy the super duper indicator, this is the one indicator that's going to give you this fantastic equity curve. And that's the one you want. And then you go and buy it and it's like, and that's a good, right? That's a good. Um, if you're looking for something that doesn't exist, you're going to be disappointed. And if you're looking for that holy grail, now there is a holy grail. There is. Had to think about this a lot, but it's not on this screen. No, but it's much closer than you think. It's you. You're the holy grail. It's you. And I never really know, sometimes I didn't really even expect to chat a little tonight, but um, if you got to be very, very careful with this. I don't think it's enough in life to talk to yourself and talk yourself into something, and then you're automatically going to do it. Like, I mean, I want to hit that 5 iron, 185 yards. Don't laugh, but I want to hit it. And I want to hit it pure every single time. Just positively thinking about it isn't going to get it done, right? It isn't. But I got to tell you something. Negatively thinking about it can really, really hurt you, right? What you say to yourself, what you do. So we'll stay with the golf realm. And I know golfers like this. I've played with them. I like competing against them too, especially when they're betting and they get inside their own head. And it's like amazing to me. And I can hear, you'll hear them, they'll verbalize it. And they'll say things like, you know, I just can't hit it. This is just not my day, Don. 2 or 3 weeks ago I was playing so well. It's just shitty. I'm not doing good. Don't like it. And they're just getting started and they start beating themselves up. I keep hitting the ball to the left. Damn it, I keep hitting the ball to the left. And guess what they do? They keep hitting the ball to the left. So you can do the same thing in trading. And I hear it. I hear it. And when I hear it in the Q schools, I will point it out. I'm like, do you hear what you're saying to yourself? No. I've had folks say, I never make any money. Really? Never? I'm not saying necessarily from, I don't know where your starting point is, but you've never had a positive trade. You've never had a positive day. You've never had a positive week. Are you kidding me? So really, that's what you're telling yourself before you get started. And equally, if you're doing something, whatever it is, I mean, I enjoy this, right? So I love this. I love being here. I love, oh, I don't want to watch TV, you know? And, but if you're doing something that is a source of frustration, you got to really stop and think about why are you doing that? Why are you doing that? Right. So I have certainly played with golfers, and if you've played golf, I certainly have. And sometimes you don't know who these people are you're going to get paired up with. And you get that guy, and it's like, oh man, he's just got like a horrible swing. It's like, man, has he ever gotten any education about it? Has he ever gotten any lessons? He's too proud to get lessons. I get lessons on golf, get lessons on fly fishing. I get lessons. I've gotten lots of trading lessons over the years. Not anymore. Not anymore. I don't. But I did. Some were good. Most weren't. But and some of the golf lessons I have to wonder about, but they were good. No, they were all in all good. But you get the guy out there and he obviously either he's not getting lessons or he's not paying attention because the swing is just so atrocious. And but then on top of it, he starts throwing his clubs around. He's got some unreal expectation that he's just going to show up and drive the ball 300 yards when just doesn't have the swing for it. And he's angry about it. And they just destroy their own day. They destroy maybe around, it don't bother me any. I just try to keep my distance. Like, I don't think I'll ride with you. If you don't mind, I think I'm gonna walk. I don't even want to be around it. I don't even want to watch it. So if you're doing that in trading, you better stop and think. You better stop first. The first thing is stop. Really think about it. This is something I really enjoy. This is something I really, really want to do because you're gonna have to really, really want to do it. And to get you through it because there are going to be times when your trading game is going to be challenged. Just is. And so any case, I got to take Ted for his little walk here. He's just come in to get me. Can you hear me patting him? I'm going to let you watch, and I think the machine is okay. Um, I think the one on the screen that you're looking at is out of sync with what I'm running. Because I had the other one, I missed that first trade and I had to assume real world position. So it still got it. And I think that I'm still in sync, so I think I'll be okay. Um, but we'll be back to answer any other questions. But give thought to what you're doing. And I say the biggest thing I'd say is that if the markets or trading is a source of frustration and everything, then there are other ways to make money. There are other things to do to enjoy, right? So know that. And if you are getting it done with whatever it is you're doing, just keep doing it. Either I'm the first one, just keep, you want to keep it to yourself or whatever, just keep doing it. Um, if you're a member, I hope you'll share it with me. I hope you will. Um, but we do share it with everybody, all the members. So to that, it's somewhat collaborative. And there are some folks that are like, I know, they're like, yeah, maybe I'm not going to say it. That's okay. But we do. We share everything, obviously. And um, and I just hope that but if you're not getting it done, the first thing I would say is just to stop. Just stop. Maybe hang up the clubs for a week or two. Maybe stop the trading for a couple of weeks and think about it. This is something you miss. It's something, and refresh and get an education from someplace, from someone. It doesn't have to be us. And by the way, we're not the Nigerians. We're not going to have, you're not going to, we're not going to Napa Valley to have a a wine and cheese party with the hoi polloi or something for 15 grand. We're not doing that. Um, we're going to just, try to show you what we're doing. And, we commit time, and it's only a limited number every year. We continue to grow. It's amazing to me. It's amazing um, how we have grown from literally nothing that we will reach a point where maybe it maxes. This year we got kind of waylaid at the end. We were on track to stop all the Q schools in November, and that storm came in and messed up our timing and messed up everything that way. But normally the Q schools will close. We only accept so many licenses, and usually it's been the last few years. It's been early November that we hit that that extent because there is support that we have to provide and want to provide, and we can only take on so many new folks each and every year. Our retention for base memberships or monthly is very high, very high. It's, like 90%. It's very, very high. There's real good value there. It doesn't take, it's $100 a month, so it's $1,200. So it doesn't take many trades to make you 1,200 if that's the way you want to look at it. But yeah, there's plenty of trades to do very, very well. The annual memberships, um, our retention is hovering at about 73, 74%, just about 75%. I wish it was 100. It probably never, nothing will ever be 100, but I still think it's very, very high. Um, and we hear this over and over and over again from our annual members that have been with us. It's like, what was so hard? I'm like, I don't know. It's like, especially from when they've been with us, 3, 4, 5 years, they'll look back like, why was I fighting it, Don? Why was it so hard in the beginning? And then I don't know, sometimes. Um, but if you're doing something you love and you're passionate about it, you'll work through the lulls and you'll, be doing it for the rest of your life. So we'll be here nearby. Any questions, let us know. Be sure to visit the site and we'll let you watch. Hi everyone. We're back and it was a long walk with Ted. I was just, thinking and I assume that everyone knows this, but maybe not. When I speak of, crypto and I see Michael Saylor, touting this and touting that, and I see the lady from ARK Investments touting this. Folks, I've seen all this before, right? I hate to sound like the old guy, but I've seen it all before. Does anyone know the name Henry Blodgett? Do you know who Henry was? Henry Blodgett had I think, a liberal arts degree from some podunk college in the 1990s, and he found himself at some brokerage, and he started coming out with these recommendations for some of the dot-com stocks. And the media got hold of him, and he became a media darling. And lo and behold, he would tout a stock, and the thing would shoot up. And he'd tout it again, and it would shoot up. And he became, a an analyst. And everyone wanted to know, what Henry Blodgett. So it became a phenomenon in and of itself. He became so popular that none other than Mighty Merrill, Mother Merrill Lynch, the Thundering Herd, they go out and they hire Henry Blodgett. Now, I can remember I had pretty good account or two at Merrill Lynch. Like, what in the hell are you fucking fuckers doing? And even the guy who was managing our account, this is the late 90s counts, said, I don't agree with it, Don, I'm like, yeah, I don't particularly like it. And I was very, very suspicious of it. And I thought it was late stage, but he was going to bring a lot of capital and a lot of enthusiasm there. Henry Blodgett was full of shit. He was a con. And it's a fact. Look him up. The dot-com blew. Merrill fired his ass. He got sued criminally by the SEC. He got sued by tons of people. Books were written about him. And in the books themselves were none other than Henry's own emails and text messages, laughing, ridiculing the sheep that were buying the stocks that he was touting, and he was shorting them as he was doing it. And he was doing it with contempt. I think he's barred from doing anything of the kind today. But you know where he ended up? He was the founder of Business Insider. Isn't that a joke? Business Insider. Another one. So excuse me if I think Michael Saylor is full of shit, or ARK Investment, or any of the stock pimps that come trouting through CNBC. And trust me, I thought Henry Blodgett was full of crap back then too. And said it back then. Of course, I didn't have, we didn't have Twitter. We didn't have anything. I just, to Susan, I'm like, my brother. I'm like, they're full of crap. We didn't get hurt. We weren't, of course, even allowed to short back then. You couldn't short, believe it or not. I don't know. You had to be an insider to short. But um, human nature doesn't change. The markets have changed, but nothing's really changed. Said this about, remember the gorillas at AMC, the theaters, and everyone's got a gorilla, so all these laser eyes. That's not what trading is. It isn't even what investing is. It isn't. It isn't. So, if you don't like it and that's what you want to do and that's what you want to play and you want to put all your eggs into that basket and that's the way you want to do, then you go right ahead and do it. Do it. Go for it. Have fun. But that's not what we do as traders, right? We just come in and say, you know what? All that narrative stuff is all BS. It doesn't matter. It doesn't. How can it matter? How can, you take his stock of Michael Saylor, MicroStrategy, MSTR. Have you seen it? I think it's down like 40% in the last 2 or 3 weeks. I mean, he takes the money from the shares to buy crypto, and I mean, it is absurd. Nvidia, the same thing. We got valuations that are absurd, absurd. But, hey, and when does the real estate, another one. Do you know what the average age of the new home buyer today is? Any guess? Just came out in the last few days. I found it an interesting number. What is the average age of a new home buyer today? 25, 30, 35, 40, 45? How about 56? 56 years old. What does that tell you? Where are the 30 somethings, the 40 somethings? Where is the household formulation or formation? You know, 45. No, it's 56, Tom. That's the average age of a new home buyer. That's spooky. I mean, Susie and I, we bought our first home. We had nothing, you know. Interest rates, we were thrilled to have it. It was 14 and 7/8, but we were 25 years old. I mean, that's where household formation starts, around the house. You got to get, the appliances and the curtains and this and that and this and that, and then you got to expand. So if you don't have that going, what's the underpinning to this bubble? What is it? I mean, in the end, companies are supposed to generate cash flow. You know that they said there was, well, you take, even the other crypto, Fartcoin. It reached a $1 billion market cap like last week or week before. Had a market capitalization bigger than 35% of the Russell 2000 stocks. 35% of the Russell 2000 stocks don't have any earnings. No earnings. So what happens is, people just start buying stuff because it's going up, or people are selling stuff that is going down. Okay, I'm all right with that. I am totally okay with that. We're doing that tonight. Tonight. And we'll be doing it tomorrow and the next day, measured in bricks, in price movement, very small increments, and not ungodly leverage. But I sure as hell am not taking all of our life savings and plowing it into anything because it's going up. I don't think so. Not me. But you can do it. You can do it. I would be looking at things from an investment standpoint, which we define as anything over a year that nobody wants, like the Japanese yen. Nobody wants it. I might be looking at that. The Aussie dollar. Nobody wants it right now. Canadian dollar, maybe a little too soon. I think they got a little more pain to go. The American dollar is going up. Bonds are going down. And the market hangs. Everything's just fine. Okay. Anywho, I mean, I remember all those names. I remember the touts and the stories, and I remember, and it happened not just the dot com, and it happened before the dot com too, right? So, I mean, I've been doing this a while, kind of dating myself, but I remember the stories. I remember the Thai baht crisis, the Thai baht was when it was contagion for the Thai baht. I think that was 90, I want to say 97, maybe 98. Mm. Do you remember the story of long-term capital? Do you know what long-term capital is? Long-term capital was a hedge fund that was very small in Connecticut. I think probably had a couple dozen employees, not many. Been books written about it. And it was in the late 90s. I'll say maybe 97, 98 in there. I think it was around there. And you can read up on this, kind of a fascinating book or two on it. And it was formed, long-term capital was formed by a couple of economists that had developed the option formula on the Black-Scholes. It was Black and Scholes, and they had a couple of other people. And they had won the Nobel Prize for their formulas, and they thought that they had a strategy, and they did have a good strategy actually for taking out small increments of money, and they were doing quite well, very well. But what happened was they became so successful that people started to throw them not just millions, but billions of dollars, billions. And you see, when you start over leveraging or going out too far in time, the game changes. It does. Um, Another person that I want you to go and listen to is the gentleman Simons, who's 41 years old, the most successful quant investor, trader in the history of the United States. He just recently passed. None other than Charlie Munger of, Buffett fame has said that he's the most successful trader ever. He demolished their returns. If they got hundreds of percent, he got tens of thousands of percent return. But Charlie Munger made a very cogent point about Simons. And he said that Simons is very, very good intraday. But when he goes to go further out, he struggles. And he did. And Simons also knew that. And Simons said that. It was a different animal. Also, in 1995, Simons, the fund is called Renaissance Capital, and he closed its doors because they could only handle so much capital intraday. Now we're not doing that. We're not here. We're not, we're not moving markets like that. But it is a different animal when you go intraday. Back to long-term capital, LTC, whose chief legal officer was Jim Rickards, the gentleman who wrote the books, on currency wars and all that. He was their chief legal person. And long-term capital started to take in billions. And Scholes and Black were traveling the country eating caviar and shrimp and lobster and getting their name even further known and living the high life and just, with the hoi polloi and doing a great time. And everything was fine until it wasn't fine. And I believe it was one weekend, and I believe if I have this correct, it's been a while since I read the book, but there was an event and it happened over a weekend, and they were highly, highly leveraged because they wanted to take in that money. By the way, we don't manage anyone's money. We manage our own, and we're very, very respectful of leverage. And its liquidity is very, very important to us. Um, Leverage is important to us, but we don't abuse it, and volatility. What happened to long-term capital, I think it was the Russian ruble collapsed over the weekend. And suddenly their Blackberries went off, and it was a Saturday, and they were in deep doo-doo. They were over leveraged. They were so over leveraged that they had to call their banks. their counterparties. Said, guys, we're in this shit. We're going to get a margin call on Monday, the likes of which we're in very bad trouble. What happened? The banks, the big banks, they had to call the head of the Federal Reserve, Greenspan, and he flew out to Connecticut. And all the CEOs of the big several banks and brokerages had to show up. It had to be absolutely fascinating, probably like the mafia in the Godfather. They all met in a room, and Greenspan came in and said, "Guys, boys and girls, you got to solve this. You got to solve it because if you don't, on Monday, when we open, the proverbial shit is going to hit the fan. Long-term capital is not going to exist, but all the brokerages and all the banks and everything else is coming down. And the country might be coming down. The whole financial system might be coming down." This is the first one. You may or may not even know the story. So Greenspan said, "You got to solve it." And he left the room. How are they going to solve it? They had to find out from Black and Scholes, and they probably didn't even know how much were they on the hook for. And all the godfathers of the banks had to pony up. They didn't want to, but they had no choice. They had to pony up. And they were going to, and then Greenspan came back into the room, came back in, said, "You got to figure it out yet?" Well, somewhat. What do you mean, somewhat? Well, there's one firm that doesn't want to do it. And the CEO for that firm's, "It's not our problem. It isn't our problem. We didn't create this mess. We're not bailing them out." "Oh, yes, you are." Greenspan. Greenspan was going to weigh in, but he said, "You're going to." You know who the firm was that didn't want to bail him out? Any guess? Lehman Brothers. Yep. Lehman Brothers didn't want to play. Lehman Brothers wanted to play hardball. Not our fault. We don't want to play. But they had to pony up. In the end, they had to pony up. But the godfathers of the banking cartel, they remembered, didn't they? Of course they did. 2008. 2008, their tits are in a ringer. Merrill, Bear Stearns, Lehman, all of them. Remember Kramer saying Bear Stearns would never go out of business? What happened to Lehman? They let him go. They let him go. It was payback. It was payback. They got rid of him. They bailed out Bear, $2, Bear Stearns, and the rest of them. Of course, Goldman Sachs. Goldman Sachs is the only company in New York doesn't have a name on their building. That's how good their reputation is. They had to go out and buy a bank out in the middle of Nebraska someplace so they could get banking status so that they could get some of that free graft money from the Fed in '08. Yeah, the Big Shot's a great read, great movie, good movie, entertaining. Um, it's understated because in The Big Short, he said that nobody knew. There was some other things going on. That's The Big Short in '08. And to the contrary, everybody knew. Everybody knew it was coming. Everybody knew. Mm. But it was also a question of when, right? So we all knew it was coming. We suspected we were shorting, housing stocks as early as 2005, too early. 2006, 2007, 2000, we all knew it was coming, just like we know it's coming now. But the operative word is it now? Is it the next 30 days? Is it in the next 6 months? Or is it in another year? Huh? But it's coming. It's coming. And when it comes, the way it'll happen, and they always do, no matter the first move, you'll get, there will be these warning shocks. They'll be really dramatic, headline grabbing, CNBC market in turmoil. They'll be doing specials that night, and it'll be Trump's fault. It'll be this, it'll be that. And then it'll get quiet. And then she'll rally back up, but they won't quite make the highs on the next rally. And then they roll, and then it rolls down hard and quick, very, very quick. And in fact, I think this time it'll be lightning quick. I think, and I don't know, but I think it'll be in a matter of a few days. I just remembered I came to know it first about the book. Bought it from London Airport. Yeah. Yep. But you want to read the book on long-term capital, long-term capital. Yeah, long-term LTC, long-term capital management. That was a fa absolutely fascinating story. There are others. There's another story called movie. You can get it online. A book called Princes of the Yen. Princes of the Yen. That is what happened in Japan. And I think Japan was like 10 years in front of us. I think the United States is going to go the way of the Japan model, but maybe not. But Princes of the Yen and another great book. I think Jim Rickards, who was the chief legal officer for Long-Term Capital, very, very knowledgeable, very, very smart guy. Great books. He's got he had a trilogy. Now he's got 5 or 6 books on currencies. He's just a terrible trader, maybe by his own admission. So I would never listen to any of his economic advice or trading advice at all. I wouldn't, but I love his books. Other great books, David Stockman's book, The Great Defamation. Great book. Female. I want to say, I think her name is Shales. The Forgotten Man. The Forgotten Man. Great book. Fine, economic finance. Um, yes. Yeah, LTC, I don't know what the book is. You'd have to research it that, there's probably been a few of them. Um, I can't remember the name of the book, but it's a great read, great story. Um, but The Forgotten Man, The Great Defamation. Also, another book that I found really, really interesting, and it's by a Harvard professor by the name, he's English, Niall Ferguson. And once again, I wouldn't listen to any of he doesn't really give any economic advice per se, I don't think, but I wouldn't listen to any of it. Um, but Called The Ascent of Money, ASCENT of Money. If you ever wanted to know, how did this all start? Where did money come from? How did capitalism come into being? What is all this? What is it? How did it come in? How did it come into existence? A great read. It's really, really interesting because that's where I was like, how the hell did this all start? You know, it's a wild read. Trying to think what else. Wait. Oh, and if you haven't read, you need to read. And if you don't have, it's a big book. It's an old book, older, 30 or 40 years now, 30 years. Um, cool. Yeah, I would check. Yeah, The Ascent of Money by Niall Ferguson. Niall, Niall Ferguson. We're very good. Yeah, the monster, the creature of Jekyll Island. Yeah, you got to read The Creature of Jekyll Island, which is the true story about the Federal Reserve, how it came into existence. Now, that was the book that truly did change our lives. Yep. And it was in the 90s. It was in the late 90s. Now, we had been doing very, very well, but it got to be the late 90s that I'm like, oh, this is nuts. I mean, it was nuts. It's like it is today. It really is. It's nuts. You know it's nuts. I know it's nuts. We knew it was nuts then. And it gets stupid because you also wind up getting people just doing wild things with their money, like buying Fartcoin or like buying crypto coin. To give you, I just need everyone to understand this because people don't know what they don't know, including in the crypto space. 60 days ago, I um I worked there at a Coinky Dink. Uh, let me put this in here. I've done this before. I'm going to do it again. Let me see if I can do this. Here, I'm going to put in the dollar. This is on a delayed on this account. I don't have the dollar on this account, but it won't matter because we're going to look at it on a daily. I'm going to put this on a daily view of the dollar. This is a dollar futures contract, US dollar. 60 days ago, 60 days ago, Swing Machine recommended, not Michael Saylor, not Kramer. Nobody's going to be talking about, the dollar, certainly buying the dollar, but Swing Machine was at 102. And by the way, it also recommended to short the euro like the next day at 102. Now you might be looking and saying, well, Don, the return on that is 5.67%. Yes, the difference between the entry price and where it's trading now. But if you had put $1 futures contract, which takes how much capital? $1,800. So let's just round it off 2000, right? Can we say that? 2000 bucks? That's how much you would have needed to take it overnight. If you had done that, you have nearly, in round numbers, can we call that 6,000? You have nearly tripled your value. So yes, you could have taken $20,000 in cash. If you had a little more, to carry would have been nice, and got yourself, $10 contracts and you would have turned 20,000 into 60,000 in 60 days with 20 grand. No one's talking, if anyone ever talks about the dollar, all they talk about is the dollar is trash. No, it isn't. No, sorry. No, it isn't. It's an old story. Okay, we were reading about the dollar and the creature of Jekyll Island and all of that stuff, back in the late 1990s. I'm sorry for the folks that have just adopted or found out about cryptocurrency. There was conversation about a Bitcoin that was going to be a bit of gold. It was all of that. I don't know where the hell the crypto came from. I don't know who the hell started it. I don't know what the hell, but I am highly, highly suspicious of it. I really am. I'm sorry. Okay. But I'll trade the thing happily, but there's no way in hell I'm ever investing anything in it. My radar is going off like crazy on that. And it's classic to me. But here people are, they're putting in their entire IRA accounts because we see and hear them into, Bitcoin because it's going to go from 100,000 to a million. All right. All right. Maybe it goes to 300,000. You could have just gone a 300% return on dollars, on dollars. Now, the other part is I get it. The dollar is backed not by gold anymore. People say it's not backed by anything. Bull crap. Bull crap. If the dollar isn't backed by gold, no, but it is backed by something. They're called aircraft carriers. They're called nukes. They're called the most sophisticated army weaponry money can buy. We spend a fortune in it. That's what backs the American dollar, and it always has. They don't talk about it, but that's it. Crypto, Bitcoin. I don't know what backs it. Okay, it's technology. It can't. There's only 21 million being printed. Okay, fine, fine. I grant you that. You can have that. But prior to 2010, it didn't exist. It didn't. There was no Bitcoin. There was no technology. Are you telling me that in this society, in the age of AI, that in the next 5 to 10 years, we're not going to have crazy advancements with chip technology? What happens then to your digital currencies? To hear Michael Saylor say that even gold has no value or gold has no use. Does anybody read? I mean, there's 1,000 years of history behind gold. Are you kidding me? With all the troubles and everything that were in Syria, the gold was still there. That dude didn't sell any of it. He didn't trade any of it. Surprisingly, he didn't take it with him. I think they were shocked. I was. But in any case, most cryptos are pump and dump. People using it over crypto saying is yeah, a new dollar. Yeah, it's nonsense. It's Beanie Baby stuff. It's Beanie Babies. That was what was going on in the dot com. It was anything with a dot com, and then it was Beanie Babies, and it's just the other book you want to read, older book about bubbles. We can't have this conversation without recommending this. It's a great read. It's older. It was written like in the 1930s and 40s. It's called The Madness of Crowds. The Madness of Crowds. You'll see it on display New Year's Eve. You think I'm going to go to Times Square and it's going to be like, 10 below or whatever it is. I mean, I get it. Fine. I'm an old fogey. I didn't do that when I was 20 though. I'm not going to Times Square to be with a bunch of drunks to. Anybody wonder what all those drones would? I mean, I don't want to be around those crowds, right? So, gives you some insight to me. I'm not a doom and gloomer, but I am a strong believer in the individual rights, the individual, um, and not a follower. Now that may sound it isn't. I don't mean to be duplicitous in that because you can follow us, but our motto, our motto behind Stock Market Caddy is learn to trade your game. Your game. I'm not telling you to go buy the yen or I'm not. I mean, you learn to, you can interpret the tools and interpret what and then learn to trade your game. See, I always wanted to, when we started this, I said to Susie, is that like, I don't want to do to people what I have contempt for. I have contempt for all those stock pimps and all that stuff. I don't want to do that. I want to share with you what we've learned, the mistakes that we've made, and then the tools that we've built so that you can take it and do with it what you want and run with it. And I'm not saying that you can't make money in bubbles. You can make great money in bubbles. And during bear markets, by the way, you can make fantastic money on the long side in bear markets because you get these vicious, vicious rallies. It's beautiful. Beautiful. And everybody will be fighting and arguing about, it's this, the same crowd that fight and argue over politics and over whatever. And the same, but you got to remember, these, you turn on any of the football games and they're freezing. There's some guy there with no shirt on and his face is painted. And I mean, you see them and they're fighting with each other in the stands. Those are the people that you're in these markets with, right? Those are them, some of them, are pretty rich. And I don't equate brains with money or money with brains. Do not add that, don't ever make that mistake. Nope. Any case. And Um, I am seeing, and how I started this was like, I'm like, wow, Susie, I'm reading all this stuff. All the headlines are very, very ominous for next year. I'm like, what's changed on that? Is it Trump? The election? Probably. Probably. I'm trying to delete that. Let me delete that if I can do it. There it is. I think it's some of that. So, and usually that crowd, they get it wrong. Where I was also going to is the guy like Tom Lee on CNBC. This is the other thing that you'll hear them say. You're going to hear it in the next couple of days if you turn those people on. He'll say like, in this time next year, Joe, this is, the S&P is going to be at 8,432. That's where it's going to be, Joe, because, we got AI and then we got crypto, and they just got to throw out all these buzzwords, and the economy's doing really good, and it's really good, and I feel really great about everything, and that's where we're going to be. You know? He sounds to me like what, when I think of when I hear these guys, I think of the guy in Caddyshack, you know, when he was the crazy guy who was chasing uh the groundhogs around. Remember the scene in the uh well, he lived in the garage, right? He was there with was it Chevy Chase? But that's what I think of when these. But then he'll say to CNBC, the disclaimer is at the end he'll say, but the thing of it is, Joe, that's where the market's going to be at the end of next year. But we're going to have some times when we go down, and we're going to have some times when we go up. But we're gonna, and then there gonna be some times, Joe, when it's gonna be really, really scary. But at the end of the year, that's where we're gonna be, Joe. That's where we're gonna be. Now, Joe, please understand, okay? I'm an economist and I'm a forecaster, and I'm gonna tell you where the market's gonna be at the end of next year. But I can't tell you where it's gonna be tomorrow or the end of the week. I mean, that's crazy shit there. There's no way I could tell you that. Now think about that. Put your thinking caps on. You tell me, if you buy a call option for next Friday, tomorrow, and you buy a call option for a year from now, which one is going to cost you more and why? Is it easier to say where the market's going to be a year from now than 5 days? I think not. And the market thinks not because it's more expensive. But they will disappear. Before Tom Lee, it was Gartman. His daughter is a producer on CNBC. Remember Dennis Cartman? Anytime Dennis Cartman said go long, you went short. Anytime he said to short, you go long. Just whatever he said, you just did exactly the opposite and you made a fortune. He was constantly, it was an internet meme. Dennis Cartman, awful. Kramer, same damn thing. And if you can find the old videos of Kramer, the contemptuous crap, there's a book about Kramer. There was a guy, Kramer had a little office in Times Square, a little hole probably above, the dirty bookstores. And he had like five or six guys that were in college or something, or just graduated. And he had a desk up top and they had little computers and he would scream and holler and throw crap at them. They'd throw it at him. And one of the guys he fired and and he wrote a book about it. And if you Google it, You'll find it. And I did read it, and it was a great read. And the guy's crazy as shit. But, he's done well for himself, right? That's all that matters to him. He's occasionally had some good lines. One of the things is you only need to get rich once. You don't need to do it twice, two or three times, right? Unless, you try to, put it all on red or black, especially late in your career. Not a good idea. Not a good idea. So we trade the money flow. We put all the narratives aside, all the opinions aside. I would arm wrestle you for the right to say that I am not the most stupid. No, I'm not stupid. I'm not, but I'm not the smartest guy in the room either. But when it comes to the market, I'm the most ignorant. I am. I'll arm wrestle you for that right because I want to be able to move left or right. I don't want to have a vested interest in being right. I don't. I want to build systems, good systems. I want to empower them. I want to enable them. I want to allocate so much of my money and extract cash flow from money flow. That's it. And if we can help you do the same, great. Um, but it's easier to learn something new. But the same token, it does take money to make money, right? So you do have to have a realistic view. If you come into the market and you got, $5,000 of capital and you don't have a job and you're trying to leverage and play and turn, 5,000 into 100,000 in 6 months, that's probably not going to happen, right? If you think you're going to work your whole career, not learn anything about the markets, and then you're going to retire, and then you're going to learn how to trade the markets, um, you know what? You might struggle. You got to understand, I had a career. Susan had a career. We flew, we traveled, we had business meetings. I was wearing a surgical mask before it was fashionable, but I was involved in the markets, kids, every day. I was always involved. I was always learning because it was something that I wanted to do, you know, and it always will be. So you got to have a realistic view, but there's an old saying, you can't be playing with scared money, right? So there's some truth to that. If it's, it has to be, capital that you're, prepared to lose, at least prepared to, and, um, and you have to learn to make technical decisions and not money decisions. Whatever job you held, whatever it was you were doing, I didn't answer a surgeon's question based on money, right? I was well compensated for what I did, but it wasn't on money. Wasn't structured that way. And so if you're whatever it is your career, if you're flying a plane, if you're doing something, I hope you're not flying the plane based on money. You're flying the plane because you really love to fly the plane. You're really good at flying the plane, and you're going to fly it the best to your ability, and get everybody to where they need to go. Makes sense? I hope so. All right. All right. I rambled on there a little bit more. We're going to continue. Pretty sleepy, not unexpected. We're still in the same trade. This little guy here, he's done a little, but the reason why we're not doing any of these is because I have the main screen, and the main screen missed a first order, and I had to assume real world position, so it didn't see these other little trades in here. Didn't see it, but we're still okay, and we will be letting it run. So if you get any other questions, though, but the books, they're great books, and let me know what you're reading. Um, I don't, I, yeah, I don't. They're okay. I will read nonfiction every once in a blue moon, but I love, I'm sorry, fiction, but I'm mostly nonfiction. And I like history, financial history, shit like that, real world stuff. If you, this is just, I don't have a Princeton degree. I don't. Um, and that may be a good thing. But if we have massive debt, right? If the country has massive debt, if the populace have massive debt, and we know that they do, credit card debt, right? Um, Debts will have to get paid. They do, or they default, right? So once it starts, you have to sell shit to pay the debt. You will sell anything and everything. They will sell stock. They will sell Fartcoin. They will sell Bitcoin. They will sell their houses. They will sell their cars. They will sell their clothes. They will sell anything to pay the debt. When they sell and they have to transact to pay the debt, what are they going to have to get? Dollars. And they're going to be in short supply. The next great bubble, in my view, and I'd love to show it to you, but I wrote a two-page letter to our family, to Susan, that I have penned on my wall. And when we became aware of the quantitative easing, we said there will be inflation. We said that it's going to be a, fantastic time for all that. But when it ends, the way it will end is not in the collapse of the dollar. Ultimately, I think it will, but it won't end that way. The quantitative, this bubble will end with a bubble in dollars. In dollars. They're going to want dollars, in my view. We'll see. It's going to be really interesting. It was well thought out. The little paper that I wrote, got a pen to my wall, and saying, like, I think that's what'll happen. Now we've had a glimpse, right? We've seen the dollar contract go to a buck 10. The dollar contract was a buck 22 when George Bush was president in 2000, 2001. That's when all this nonsense went bonkers. Really started with him. So could the dollar contract go to a buck 21, buck 20? Yeah, I think so. I think it could go to a buck 40, a buck 60, a buck 80. The rest of the world won't like it, but I think it could. And not everyone's going to be able to get dollars to pay off the debts. And their money or their value or their asset or their standard of living is going to go poof. It's going to evaporate. It's going to go to money heaven. They're not going to be able to pay. That's what's going to happen. And when we get to that extreme pain, and I don't know when that's going to be, but I think it'll happen quick. I think it'll be a year or 2 years, and it could still be with Trump. And what will they do? They'll print again. They'll print again. The thing of it is that if you don't have the dollars, if you put everything in Bitcoin, if you bought and held and hold in everything, the markets could be at such levels that would be, ridiculous, but you won't have the money to buy them or invest in them or even to trade them. But that's what I think. I think the next bubble, and I think it's in the US dollar. That's where I think it's going to be. And you talk about a contrarian opinion, and that's just an opinion, right? I'm not investing that way. I'm not trading that way. I'm not. because I don't have to. You can just trade, right? Don't have to. But that's where I think if you think it through in the bigger picture of this, in 1981, interest rates were at 18, 19%, virtually 20%. Interest rates went all the way down to flat, almost to negative. People thought they couldn't go any lower. We'll short them. They would go lower. Do I think we're going back to 20? I don't think so. I don't think so. But could you know, the 30 year go to 7, 8, 9, 10, 12? Yeah, yeah, it could. It absolutely could. What do you think is going to happen to home prices? What do you think is going to happen to the stock market? You tell people that and they'll be like, don't tell me that. Okay, don't. All right, I'll tell you a good story. Okay. Yeah, it's just nothing's ever going to happen. And interest rates, yeah, the dollar's going to trash and you got to get in the market because, I mean, that's lunacy. It's lunacy, you know. But, hey, whatever, whatever. That's why we say it all the time because you go back and watch videos. I say, hey, you know what? There was a bubble back when we were I can remember Guiadami, and I thought he was right, saying, hey, when we were when the S&P was at 1980, he's like, this is a bubble. I'm like, yeah, you're right, Guiadami, it's a bubble. We're now at 6,000. Still a bubble. I'm not going to give up, I'm not going to give up on this. Still is, so bubbles can, they can grow gargantuan. It is going to be absolutely fascinating to see how this all unfolds. It will be wild. And when it does unfold, then I will just share with you this, right? The noise level will really, really pick up, and everyone will have an opinion on it, including me, but I won't trade my own opinion. I won't. I won't. So don't think I will. So don't anybody be trading like, oh, I'm going to go long the dollar because Don said the dollar's. No, I'm not. I don't know. I'm going to trade it though. I'm going to trade it. And I'm going to, academically watch it. And it's going to be really, really interesting. And the volatility is going to be great. That I do know. Then we'll extract our cash flow. And if they pay us in dollars, they pay us in dollars. They pay us in Bitcoin. They pay us in Bitcoin. They pay us in Ameros or whatever the hell it is. Then that's what they pay us in. But it's going to have to be a currency because we all got to pay our taxes, right? That's the only reason why we pay taxes too, by the way, right? We're never going to balance any budgets. The only reason you pay taxes is to keep you adherent to the rules, to make you work and earn the currency so you can pay your taxes. Otherwise, they put you in jail, right? That's the only reason. There's no balancing. You're not paying anything. They're not paying anything off. It's a means of control. There are 24 trading days in a month if you count Sunday nights, right? Now we've already said we don't like to trade on Fridays. Almost never trade on Friday afternoon. I might trade a little bit on Friday morning, but I'm starting the week thinking, you know what? I'd like to finish, Monday. Well, it's a holiday week, so, but on a normal week. So I mean, we could right now, we've been up and down, but we could close this at 215, 220, right? We could. You could. And if you put together 20 trading days and you pocket 200 bucks, all right, it's 4 grand a month. All right. You know, I mean, it's not going to put you on a boat off of, Monte Carlo, but it might make your life a little bit easier, I would hope, without too much crazy risk. Now, you get impatient. Well, you know what? I'm going to put on 5 of those contracts and because I got the firepower and I'm going to not make 200, I'm going to make, 2000. No, just be careful with that. It's not what we teach in the beginning. It isn't, right? Mhm. We'll let you watch and I'll shut up. But it's at times like this, though, the end of the month, end of the quarter, end of the year, and it's the same thing, and everyone's going to be looking back and looking forward. And um, my suggestion to everybody is stay in the present. Stay in the present. The past is the past. You can't get it back. If you've lost money, you've lost money. Can't get it back. Get over it. There's no crying in baseball. There's no crying in trading. Can't get it back that way. It's gone. Can't worry about the future. It's pointless. You just learn, get disciplined, play the here and the now, and live your life. And don't let anyone intrude on it, including me. That's our message over and over again, even during the Q school. I'm going to show you this. I'm going to show you how, but I'm begging you, please learn to play your game, not mine. Now, if you call and ask me what are the settings, I'm going to tell you, but I'm going to also be reminding you, please, please take responsibility for your own game. Decide what markets you're going to trade. Decide what you're going to trade. Decide how much leverage. When are you going to trade? Got to have all that defined before in advance. And you make decisions based on all that, and you'll be in a better place for it. And everyone else will be flying all around you. And that's okay, right? Your neighbors don't won't have any idea what the hell you're doing, except having fun, right? So, all right, we'll let you watch. Thanks. Now, we mentioned earlier to everybody, we're running this very same thing on a main screen, and it was out of sync earlier. And because we had to do something called assume real world position, we didn't get these trades. So we're still in our original trade. It will get in sync with this. And but this, there are a lot of little trades in here, just so that everyone knows. Had we traded all those, so there would have been four trades, and we'd only be up 90 bucks. So they would have been profitable. This is the equity curve that we're looking at. I'm not saying that that's what we're going to do, but it does look interesting to us. And yeah, we shall see. That's over time, though, folks, over time.